What if I told you that banks don't actually lend you money they have, but instead they create it out of thin air? It sounds like magic or maybe even a scam, but it's 100% real and it's happening every single day. Right now, as you watch this, banks are typing numbers into a computer, generating money that never existed before, and then charging you interest on it. Sounds unfair, right? Well, it gets crazier because this system is legally designed to benefit the wealthy while keeping the average person trapped in loans, debt, and inflation. But here's the kicker. You don't have to be a victim of this system. By the end of this video, you'll know exactly how banks manufacture money from nothing, and more importantly, how you can use this knowledge to your advantage instead of falling into their trap. Let's dive in. The banking illusion. Where does money really come from? Most people believe that banks loan out money from deposits, that when you put your hard-earned cash into a bank account, the bank simply lends it to someone else. Wrong. That's an illusion. One of the biggest financial myths out there. Here's the reality. Banks don't need your money to make loans. They create money out of nothing and then charge interest on it. Let me put it this way. Imagine if you could just type any number into your bank app and boom, suddenly your balance jumps by thousands of dollars. Sounds crazy, right? Well, that's exactly what banks do every single day. The difference is when they do it, it's legal. When you do it, it's called fraud. Now, here's a question for you. Have you ever stopped to think about where money really comes from? If you have, drop a comment below because you're already ahead of most people. But if this is blowing your mind, don't worry. We're about to break it all down in a way that makes perfect sense. Let's move on to the trick banks use to create money from nothing. The trick, how banks print digital money. The secret behind this money-making illusion is something called fractional reserve banking. And trust me, once you understand how it works, you'll never look at banks the same way again. Here's how it works. Let's say you deposit $1,000 into your bank. You probably assume the bank keeps that money safe in a vault, right? Nope. Under the fractional reserve system, banks only need to keep a small fraction of your deposit, let's say 10%, as actual reserves. The rest, they can lend out multiple times over. Example, you deposit $1,000 into your account. The bank keeps $100 in reserve and loans out $900 to someone else. That person spends the $900 and it gets deposited back into the bank. Now the bank takes that $900, keeps $90 and loans out another $810. This cycle repeats over and over again, multiplying money from thin air. In reality, if a bank starts with $10,000 in real reserves, they can legally lend out up to $100,000. They didn't have that money to begin with. It was created as digital currency the moment they issued loans. But here's the part they don't tell you. Every time money is created this way, it increases debt. Banks get richer by charging interest, while the average person gets stuck paying back money that never existed in the first place. Now, you might be wondering, if banks can just create money, why does anyone go broke? That's where things get even wilder. In the next section, I'll show you why the rich get richer and how the system is designed to keep you financially trapped. Stay with me, it's about to get even more interesting. Why this makes the rich richer. Now that you understand how banks create money from thin air, here's the big question. Who benefits the most from this system? The answer, the ultra rich. See, while the average person takes out loans to buy cars, finance vacations, or cover emergencies, billionaires and wealthy investors use debt to buy assets. Let me give you an example. Imagine a billionaire takes out a $10 million loan at a low interest rate. Instead of spending it on luxury items, they use that borrowed money to buy real estate, stocks, or businesses, things that increase in value over time. Meanwhile, inflation, the silent wealth killer, reduces the value of their debt over time. So years later, they're sitting on a portfolio worth $20 million while their loan remains the same or even worth less in real terms. But what does the average person do? They borrow for liabilities, a car that depreciates, a vacation that leaves nothing behind, or credit card debt for things that don't build wealth. And while their debt stays the same, inflation makes everything else more expensive. That's the difference. Rich people use debt to make money. Poor and middle-class people use debt to spend money. Here's the truth. If you're using debt the wrong way, you're playing a losing game. And the banks, they're making billions while most people fall deeper into financial traps. The hidden danger, inflation, and debt traps. You've probably noticed that everything is getting more expensive. Housing, groceries, gas. That's not a coincidence, it's inflation. And here's the hidden danger. When banks create too much money, it makes your dollars worth less. Think about it. If we suddenly doubled the amount of money in circulation, but we didn't double the number of goods and services, what would happen? Prices would skyrocket because now there's more money chasing the same amount of things. This is exactly what happens when governments print money and when banks multiply money through loans. The rich protect themselves by owning assets that go up in value. The poor, who rely on cash, get left behind. And here's the kicker. Governments do the exact same thing. They print money by issuing bonds, adding trillions to the national debt. Debt that taxpayers, aka you, ultimately pay for through taxes and rising prices. So here's my question to you. Is this system broken or just misunderstood? Let me know in the comments below how you can benefit instead of getting left behind. Now that you know the game, it's time to start playing it the right way. Here's how you beat the system instead of falling victim to it. 1, don't use debt for consumption. Use it to buy assets. Instead of financing a car or a vacation, borrow to invest in cash-flowing businesses, real estate, or stocks. 2, think like the rich. The wealthy borrow against their assets, while the poor borrow against their future paychecks. A millionaire takes out a loan backed by real estate or stocks. The average person takes out a loan backed by a promise to work harder. 3, use good debt to your advantage. Not all debt is bad. If it's making you money, it's good debt. If it's costing you money, it's bad debt. Learn the difference and you'll never look at loans the same way again. The system isn't going to change, but you can change how you play the game. Understanding how money is created is the first step in making better financial decisions. While you can't control government debt, you can control your own. Using debt wisely, investing in assets rather than liabilities can put you on the winning side of this system. Now that you know how banks really create money, how do you feel about the system? Is it a genius loophole or a giant scam? Comment below. I read every single one. If this video opened your eyes, smash that like button so more people can wake up to the truth, and hit subscribe for more financial secrets that the rich don't want you to know.